The 8 best tax write-offs for small businesses in Canada. Hi, my name is Allan Madan from Madan Chartered Accountant. Today, I will reveal the 8 best tax write-offs for small businesses in Canada. If you own a small Canadian business, it is beneficial to claim these 8 tax write-offs as they will help reduce your taxable income and taxes payable. Number 1, home office expenses. The most common tax write-off for a small business in Canada is home office expenses. If you work from a home office, you'll be eligible for deductions on certain home office related expenses. These include mortgage interest on your residence, utilities, property taxes, repairs and maintenance, home insurance. The amount of home office expenses that you can write off is determined by the percentage that your home office space is of the total size of your home. Number 2, vehicle expenses. As a small business owner in Canada, you can deduct vehicle expenses. Vehicle expenses include capital cost allowance if you own your vehicle, fuel and oil, insurance, lease payments if you lease your vehicle, parking fees, repairs and maintenance, toll charges, and vehicle registration fees. The amount of vehicle expenses that you can claim is determined as a percentage of your business mileage in the year over your total mileage in the year. For example, if you drove 5,000 kilometers in the year for business purposes and 20,000 kilometers in total for the year, then you can write off 25% of your vehicle expenses. You are required by the CRA to maintain an accurate logbook in order to verify the amount your car is being used for personal and business reasons. Tip: if you own your vehicle, then you can claim depreciation for 30% of the cost of the vehicle each year under the declining balance method. This is referred to as capital cost allowance. Number 3, accounting and legal fees. Another way of reducing your taxes is by deducting fees paid to your accountant for preparing your income tax return. Similarly, the amount that you spend on legal fees in the ordinary course of operating your business is tax deductible. Number 4, office rent. Rent paid to your landlord for the use of office space is tax deductible. Keep a copy of the lease agreement and rent receipts, as you will be required to provide these documents should you be audited by the CRA. Number 5, advertising. Depending on the advertising method used by your small business, advertising expenses can either be fully or partially written off. Online advertising. Online advertising is fully deductible, including your website's domain name registration and web hosting fees. Television and radio advertising. This form of advertising may be fully deductible for Canadian stations. If you advertise with a non-Canadian broadcaster, then these expenses cannot be written off. Magazine and newspaper advertising. Canadian market-based magazines and newspaper advertising costs can be fully deductible. In order to be written off, at least 80% of the magazine and newspaper material must be journalistic information. Advertising cannot take up the majority of the content space. If a magazine or newspaper contains less than 80% journalistic information, then only 50% of the advertising cost may be written off. Number 6, meals and entertainment. 50% of the amount that you spend on meals and entertainment is tax deductible. For example, let's say you decide to take your client out for dinner or to watch a baseball game. 50% of the cost can be deducted from your business income, assuming that you are able to provide a receipt. Nevertheless, there are circumstances where you are able to deduct 100% of the cost of meals and entertainment. These include staff events or parties, to a maximum of 6 per year, meals and entertainment that are provided for a registered charity fundraiser. Number 7, insurance. There are several different types of insurance that qualify as tax write-offs for small business owners in Canada. Types of insurance. The types of insurance include general business liability insurance, business property insurance, business interruption insurance, and life insurance. Number 8, capital assets. Tax depreciation is a major tax write-off for small businesses in Canada. Capital assets that can be depreciated include furniture and fixtures, equipment, computers, and more. However, they cannot be written off in a single year. Instead, these assets are written off over a period of time based on the CRA's specified depreciation rates. The depreciation rates for 2016 include building 4% per year, furniture and fixtures 20% per year, software 50% per year, computers and computer equipment 55% per year, vehicles 30% per year. Tip: make capital purchases right before the year end so you can take maximum advantage of depreciation deductions on those purchased assets. In the first year, only half of the CCA can be claimed. In conclusion, tax write-offs will ultimately help you save money by reducing your business's taxable income and taxes payable. Consult your accountant to find out which tax write-offs you could be taking advantage of. For more tax tip videos, please click on the subscribe button below and visit our website. Feel free to follow us on Twitter, Facebook, Instagram, and Google+. Don't forget to like, comment, and subscribe to our YouTube channel. See you soon, and thanks for watching.